Well, good morning, everyone. My name is Thomas Montgomery, and today we're going to talk about the funding guide, 10 mistakes that will get you denied for business funding. Now, throughout this brief presentation, you will be seeing some green text, like on the title screen here, and that's going to bring your attention to some resources that are available through the U.S. Startup Grant that can help small businesses avoid the mistakes and become credible for funding. Let's go ahead and get started. Let's step back first and talk about, why does this matter? Why is it relevant? Well, if we're thinking about getting funding to start or grow a business, we first need to recognize that lenders and issuers of credit will often automatically decline you based upon not meeting their approval standards. So what could we discern from that? Well, we probably need to try to meet their approval standards, don't you think? So in fact, there's a formula. So if you meet the formula, you get approved, often automatically approved. If we don't meet the formula, we're often declined, often automatically declined. So it's key to understand this formula and this process, because if you've been declined in the past, or to avoid being declined in the future, we want to meet the underwriting criteria to be approved. What I often see is that many people think of financial topics from the consumer perspective versus the business perspective, and it's different. If we're trying to go get business funding, we need to look at things through the lenses of business finance, not consumer finance. So for example, if we want to get a business loan, we want to be thinking about, is our business credible? Is the business credible? But so often people think about, well, my personal credit's not so good, or whatever, individually. We need to try to separate the two. What we want to do is help entrepreneurs look at their business as a business and prepare for business funding, and not focus on the consumer perspective. Also, contrary to popular belief, it is inaccurate. It's not correct. It's inaccurate to think that new businesses can't be strong on paper, that they can't have strong financials. That's a fallacy. That is one of the quickest routes to getting declined for funding. So often we'll work with clients and they'll say, well, I don't have that. I don't have a balance sheet. I don't have collateral. I don't have this, that, because it's a brand new business. It's a startup business, almost like it's a crutch, like it's an excuse. Well, it may be a new business, but we need to make this business look credible if we're trying to get business funding. And that's what we're going to be talking about over the next few minutes today. Because it's not too good to be true. We're not going to game the system. A lender is not going to loan money to a business that looks risky. And so we would be foolish to think that a lender is not going to consider the business's credibility, the business's liquidity, and the business's solvency. That would be a horrible mistake to assume that those things don't matter even for a new business, because they do. The good news is, though, we can overcome those challenges, and we'll talk about that as we go through. Because the bottom line is, in short, we must get your business credible on paper. Now, when I say that, of course, we're talking about legally and ethically. Don't infer anything different, but we need to look credible on paper. Our business needs to look credible on paper. And so we're going to go through the next few minutes and talk about specifically what that means. So you have some takeaways. So from this brief conversation today, you'll understand almost a checklist of what is it that you need to have in place to have a credible business for business funding, for a successful capital raise. And again, as a reminder, when we see the green text like at the bottom of the screen, that is a cue to let you know there are resources in place. So we'll be talking as we go through the 10 mistakes about resources that are available to small businesses through the U.S. Startup Grant. All right, so mistake number one, business address. The business address is the official address of the business. So we're not talking about where you work. You could work from your home office, you could work from a cruise ship, you could work from an RV. We're not talking about where you work from. We're talking about the official address on file of the business. It needs to be a real brick and mortar building with a physical address. Well, what does that mean? Home addresses are not good. They look risky. Post office boxes addresses are not good. Even these shared office addresses where they give you a suite number, but it's the same suite number that other businesses have, not good. So we need a good business address to avoid mistake number one, not having a good business address. Because again, we're not going to game the system. Lenders are sophisticated. So we could say, oh, our home address is our business address, but they're going to look it up in most cases, and they'll see that it's categorized as a residential address. That does not look credible, especially for larger amounts of business funding. We need to have a business address that's a commercial address. Furthermore, we need to make sure that the addresses match. So with the IRS, with the Secretary of State filings, with the bank, we need matching addresses. And as mentioned here, those virtual addresses, those shared suite numbers are not recommended. And we're even seeing Dun & Bradstreet, which we'll talk more about in a moment, push back on those shared addresses. But we've definitely seen a number of banks, including big banks like JP Morgan Chase Bank, push back on virtual shared addresses. We don't want that. Now, another thing to consider about business address, and this may stretch your perspective a little bit, is that not all lenders loan in all areas. We have a number of lenders that operate in certain states, but not in other states. Beyond that, there are some geographic areas. So for example, some of you are familiar with the Chapman Fund. It's awesome. It'll only go up to 250,000, which I guess is a negative. It caps out at $250,000, but it's through a taxing authority. So your business has to be located in that taxing district to qualify. But again, the good news, and we see the green font here, is we can provide you through the grant a free business address, a true commercial business address that does have geographic access to the Chapman Fund. So that is mistake number one, a bad business address. Now we know what a good business address is. Let's move on to mistake number two. The second common mistake that we see that will prevent us from being able to qualify for funding is based around our entity. So to get financing or credit for your business, it is best to have an entity. Well, what does that mean? Well, to not have an entity means that you're operating as a sole proprietorship or a DBA. So we're not saying that that's illegal, but it's not ideal. So instead, we're going to be better off to have a corporation or an LLC. And it also helps reduce your liability. If you're considering bringing on investors, which we call equity-based capital, they almost always prefer a C Corp over an LLC. But regardless, we recommend forming the entity, the business entity, the corporation or LLC, in the same state as the business address. Doesn't have to be, but that's recommended. Now, conversely, a lot of people think, oh, I don't live in that state, so I can't form a business in that given state. That's absolutely inaccurate. We do not have to live in the state that we form the business in. It's very common to form businesses in different states for different reasons. Now, through the grant, we'll actually pay for the Secretary of State filing fees to set up a new compliant business entity. So that is another perk that you should be aware of. All right, let's move on to the third of the 10 mistakes. Mistake number 3 is business name mismatch. And this kind of overlaps a little bit some of what we discussed, but it's so important that we want to identify it as a separate topic today. One of the most common reasons for funding applications being denied is that the lender can't easily locate the business online. So we need to make sure that we're using the exact same business name on our application that's listed online, that's listed with the Secretary of State, that's listed with the IRS, that's listed with your bank. We talked about that earlier. So the business name as well as the business address should all match. We want to use the exact business legal name. So again, consistency, the name and the address across all uses is crucial. All right, so let's move on to mistake number 4, not being in good standing. Well, being in good standing, we're talking about with the Secretary of State. Well, when you first form the entity probably is going to be in good standing, but we're talking about on an ongoing basis, making sure that the business shows in good standing with the Secretary of State. So we want to make sure that the Secretary of State shows that our business is active and in good standings. Well, what does that mean practically? Well, there may very well be some annual reports that have to be filed to be able to maintain that standing. But I wouldn't worry about that. We're going to help you get a new entity formed. We won't have to worry about filing those annual reports for a while now. But we do just need to be cognizant that forming and operating a business requires some diligence. It's not just a hobby. It's responsible behavior that allows us to qualify for a lot of funding. And so there's some requirements that are necessary, and those are what we're going through today. All right, mistake number 5, EIN. Many of you have heard of this. Sometimes it's called a TIN, taxpayer identification number, but essentially it's analogous to your social security number. People have social security numbers, SSNs. Businesses should have EINs, employer a federal tax identification number. We're going to need that to go open our bank account. We're going to need that to build our business credit profile. So you can see here that there's an order to this that I didn't explicitly state. So first we need to have an address, which was back on mistake number 1. First, we need to have an address. That's converse to what most people do. Address first, file for the entity second, obtain EIN third. Because the EIN is going to ask for things like, well, what's the business name? And we shouldn't use a business name that's not actually formed. And it's going to also ask for the address. And if we don't have the commercial address that we're going to use, then we're going to be in a cleanup mode, or we're going to have inconsistencies. So we want to make sure that all the paperwork, all the entities are correct. And we've just found it's easier for businesses to form a new entity. In many cases, it's easier for a business to form a new entity that's set up correctly rather than clean up. But certainly if you have an existing entity, you'll want to go back and make sure that all of this is accurate and consistent across these different organizations. In closing on mistake number 5, I just want to reiterate again, we need to be in the business mindset, not the consumer mindset. So if we're trying to go get business funding, we want to get business funding under the EIN, thinking about it from a business perspective, not under our social security number. If you want to get a personal loan, then of course your social security number and all of that personal information is most relevant. Here, what you and I are talking about today is getting funding for the business. All right, so we're to mistake number 6, business reporting agency profiles. So in many cases, we'll see entrepreneurs that will skip this step. Maybe they have an entity and maybe the entity is created properly, but they've not set the business entity up with the credit reporting agency. So for example, Dun & Bradstreet. One of the things that we're going to help you do is get your DUNS number, which is free. So the DUNS number allows us to obtain a PAYDEX score, which is the scoring mechanism used by Dun & Bradstreet. That's how a lot of lenders and extenders of credit will evaluate if the business is a credit risk or not. Again, we got to think about this from the business perspective, not personal. From a personal perspective, we think about, okay, our Experian and Equifax and TransUnion and what are our personal scores. We're setting that aside. We're focused on getting the business set up properly. And part of it is having the reporting profile. Now, what can happen is just by forming a business entity with the Secretary of State, for example, Dun & Bradstreet may create a profile automatically for you because they pick up from this public information. But I can tell you 99 out of 100 times, it'll be flawed. The profile that they'll set up will be flawed because they're just pulling from this public information. We really need to go in and make sure that our profile is accurate and correct. Everything from our address to our industry code and so forth. Because you will often get declined if we're not listed properly with the business credit reporting agencies and if we don't have established credit. We're going to talk about that more in just a second. But the good news is, again, see it in green, we're going to help you get your profile set up with Dun & Bradstreet for free. All right, so mistake 7 really carries on from mistake 6. Mistake 6 is we're not set up with the business credit agencies like Dun & Bradstreet. Now on mistake 7, we're pulling back another layer and saying not only, well, we may be set up, but have we demonstrated that we've had extensions of credit and we've met our obligations, we've paid as agreed. So at least for Dun & Bradstreet, which we've talked about, in an Experian business, we're not talking about personal Experian business, we want to make sure that we have good credit ratings with at least these two. Now, business credit scores are much different in a variety of ways from personal credit, but what's most relevant here is the score range. Business credit scores go from 0 to 100. The higher, the better, of course, but we don't need 100 to get approved. We certainly want to strive to have an 80 or higher business credit score. So in other words, an 80 or higher Paydex score with Dun & Bradstreet, an 80 or higher Intella score with Experian Business, for example. We can help you do this, and we can accomplish this very, very quickly. Building business credit is different than personal credit. We've said that, but also it can be done much more quickly. And businesses have much, much more borrowing capacity than do individuals. So once we establish an 80 business credit score with each, we can continue to build and have more access to capital. But in the short term, what we want to do is get your business to at least an 80. And again, we'll help you with that for free, as shown in the green. All right, so let's move on to mistake number 8. Lack of credible financial statements. This is one of the most spirited conversations I often have with small business owners, because in many cases, not only do they lack credible financial statements, in many cases, early stage entrepreneurs will be quick to dismiss the relevance, but it is relevant. So let's talk about it. So every business, even a startup, should be able to produce key financial statements. Let's focus on the two most significant financial statements: balance sheets and income statements. We'll back up. What's a balance sheet show? Assets and liabilities of the business, not of the person, because remember, we're talking about business funding, business financing, getting the business credible. So balance sheet, assets and liabilities of the business. So often I'll have lesser financially literate people say, well, I don't have a balance sheet, it's a startup. Well, we need to get a balance sheet. Oh, no, it's a startup, it doesn't matter. It does matter. So, and we'll talk more about that in a moment. So the balance sheet shows assets and liabilities of the business. In contrast, the income statement, also called profit and loss, shows revenue and expenses. Now, I'll give you a little bit that if the business just formed yesterday, what do you think the income statement's going to show? Certainly, it starts out at 0, day 1. Now, as quickly as possible, we want to start creating a positive income statement, a positive profit and loss. And we have some tricks of the trade to accomplish that. So sure, day 1, the income statement will be blank, but it shouldn't stay blank long. And we'll show you legally and ethically how to manipulate that. Now, the balance sheet as of day 1 shouldn't stay blank. We need to be adding assets very quickly to create a strong balance sheet. We'll talk more about that in just a second. So yes, even brand new businesses should be able to prepare financial statements. We cannot fall into that mindset of they call it the ostrich defense. You know, some of you are attorneys or paralegals. The ostrich defense in legal terms is where someone says, oh, I didn't know that law, or I didn't know about that, so I can't be held responsible. And that's nonsense. So we can't think that, oh, just because it's a new business that I can put my head in the sand and I don't have to care about financials. Well, if we're trying to position the business to be credible for funding, we got to get our head out of the sand and prepare these documents. And we're going to help you with that, of course. Because in fact, there are some very innovative and legal ways to rapidly strengthen the financial statements, both balance sheets and income statements. So just for one example, the Opportunity Fund, some of you are familiar with. Well, with the Opportunity Fund, we can literally start putting $1,000 a day direct deposits into the business bank account. Well, why would that matter? Well, of course, that provides the business some working capital, but also on paper now, the business is solvent. It's active. It's not what's called a zombie business. I don't know if you watch Bloomberg News like I do, but frequently they talk about zombie businesses that are a business in a name only, but they really don't have financials. They often don't have profitability. The Opportunity Fund provides a mechanism to create positive financials for a business immediately. And again, we're going to help you create these financial statements for free, so don't feel overwhelmed. All right, 2 more mistakes to go. Mistake number 9, collateral. This is another area where I often will have early stage entrepreneurs say, oh, this doesn't apply to me. You don't understand. It's a new business. I don't have collateral. Well, that's horrible. That's horrible. And that's a mistake. And that could prevent us from getting funding. So we're going to learn about that and we're going to overcome it. So while accessing business credit doesn't take into consideration collateral, most business loans will. And so what is collateral? Collateral are the assets that we're pledging in case of default. Different lenders and different loans have different collateral requirements. So there's not just a simple answer. But in general, what we like to do is show enough collateral on paper on the balance sheet to match dollar for dollar the amount of funding that we're pursuing. So that provides the lender confidence that if for some reason the borrower doesn't repay, there's something to mitigate the risk. So yes, this is relevant for startups. Yes, this is a common mistake that keeps startups from getting funding. But the good news is we can literally, through the grant program, we can transfer assets legally and ethically, real assets over to the financials. So we have collateral immediately. You know, the day after forming the business, we can have a strong balance sheet. All right, so this takes us to mistake 10 of 10. And this is overlooking alternative sources of financing. So no, we're not talking about merchant cash advances or high cost alternative sources. But banks are often what we think about when we want to get business funding. And so you have your top tier banks, your Wells Fargo, your Bank of America, Capital One, JP Morgan Chase. So they do some lending for small businesses, but then you get into the regional and community banks that often do more lending for smaller businesses. But separate from all those categories of banks, there's other sources of capital. So for example, we talked earlier about the Chapman Fund. The Chapman Fund is from a taxing district. So the example you commonly hear me use is if you and I wanted to move to Tulsa, Oklahoma, there's a tax allocation that you and I could move to Tulsa, Oklahoma, and they would literally pay us $10,000 to move there. And then there's different types of economic incentives in different parts of the country. Well, the Chapman Fund, it has nothing to do with you moving as a person, but to start or grow a business, the Chapman Fund does offer up to $250,000. That can be used for fixed assets, new construction, renovations, leased property, equipment, inventory, working capital, a broad use of funds. And so that's Another benefit that we provide is by providing that address that we talked about back on mistake number 1, you'll be positioned geographically to qualify for the Chapman Fund. All right, so let's wrap it up on this screen here. So what we'd love to do is help you create a business that's credible on paper to access the capital that you need. You'll see that the Startup Business Funding Package is a simple grant subsidized program to create a fundable business. So you can see the value proposition. We'll provide you a free unique business address. That was back on mistake number 1. We will pay for the filing with the Secretary of State. So we have a real entity set up properly with the Secretary of State. Then, of course, we'll help you get your EIN. Once these 3 are in position, then, of course, we can go get the business bank account. We're going to help you for free build your business credit profile. We talked about it's important to set up the profile and then to add trade lines under that with Dun & Bradstreet and Paydex. So we're going to help you do that. We're also going to transfer $10,000 of real assets over to you so we can post those on your balance sheet, on your financials. That shows liquidity from the get-go, shows collateral for funding. We'll provide you free access to the Opportunity Fund through this grant program. And we've talked about that briefly before. That's literally, and it's up to you, could be more or less, but normally it's $1,000 a day directly deposited into your business checking account. And then lastly, geographic access to the Chapman Fund. So with that, you're welcome to, of course, visit our Startup Funding Business Package page, guaranteedfunding.org, Startup Business Funding Package. You can email us, support at, you can call us, you can text us. But if you'd like to be considered for this, you really need to go to the website, and there's a brief form that you fill out. That's and there's a training video. That's what's required to plug in to the Startup Business Funding Package. So thank you all. Hope to have a chance to work with you. We have a great referral program. If you know of others that might be interested, pay you $1,000 for each person you refer over with no selling involved. Thanks, everyone. Have a great day. Talk to you soon. Bye-bye.